pulling it all together, the step-by-step daily routine. I find with a lot of people, especially when they're new, they kind of sit down, that some people have got 3 or 4 uh, screens and they've got all the gear and they sit down in front of them on a morning and they're kind of lost. Up till that point, everything's great. And then suddenly, what do I do now? So I'm going to show you what I do every single day. And this should make things easy for you. And it actually takes me probably half an hour. I do a couple of hours research on a weekend, and I've explained in previous sessions that for me, trading is 95% planning. Today, I've been quite active in stocks for things that I have been looking at for weeks and weeks and weeks for prices to pull back on. And so it's all about planning, it's all about patience, and we're just in it to try to make a profit. We're in it to make the money, not for the fun of sitting in front of screens for 8 hours a day. And Elijah says, hope everything's okay. Yeah, it's a family matter, Rich had to dash off to. And who else we got in here? Madhu is from Nigeria as well as. So I say, we can have a Q&A at the end if we have time. So I'm quite happy to carry on at the end if you like. And in the meantime, I have to read out the disclaimer. So let me find the disclaimer. Can you see my screen? Yep. The information provided in this webinar is for educational purposes only, should not be construed as financial, investment, tax, or legal advice. The content is based on general information and does not take into account your personal financial situation or individual needs. Before making any financial decisions, we strongly recommend consulting with a qualified financial advisor, tax professional, or legal expert. Take a deep breath. And the presenter, me, an organization, Tickmill, hosting this webinar, make no representations or warranties regarding the accuracy, completeness, or reliability of the information provided. Past performance is not indicative of future results, and all financial decisions involve risks. By participating in this webinar, you acknowledge and agree to these terms. And basically, guys, the bottom line is the opinions of the presenters are mine, but only my opinion, and not of Tickmill, the brokers. So, if you're not familiar with who I am, then I've shown this before as well as. So why does my slideshow keep stopping? So what I've gone through with you previously, we had a look at this series of 5 webinars. This is the curriculum I go through with private students who pay me 10 grand. So I have copied and replicated that, and this is the process. Ashley's popped in for half an hour tonight on his way, busy day for him as well. But this is the process that they've all gone through. And today's process session, as I said earlier, is all about having a step-by-step process to follow. So tomorrow, you will be able to sit down, you will be able to have a look through the websites I look at, be able to look at some of the different markets, try to work out whether we're looking at dollar strength today or dollar weakness, because as Forex traders, everything goes back to the dollar in one way or another. And also, as I said, for you to know exactly what you're going to do. I use this process for Forex trading. I also use it for stocks and crypto. I have been using this methodology for over 20 years. And this session again today is scheduled for 60 minutes. As I said, if we have a Q&A at the end and we need to go over it, that's fine by me. I will sit here as long as you wish to ask questions. So again, about me, I've been involved in financial markets for 30 years. I was buying stocks in the 90s in the dot-com boom. I was telling somebody about it today. We used to buy stocks, penny stocks from newsletters. You used to get something through the post and then have to ring your broker up. This was all pre-internet and all the fantastic terminals that we get these days for free. I started trading Forex in 2002, lost a lot of money in the first few years. I had emigrated to live in the Canary Islands, and like most people, I was sat on my own and losing and got lost and didn't know where to go. And for that, thankfully, I've managed to find Rich Friesen, who was going to be the guest this evening, who will be with us next time. Rich, I'll show you a bit of his background in a moment. And then in 2006, after working with Rich for 6 months, he recommended me to a fund in the US and initially gave me 25 grand to play with. And by the time I'd finished with them in 2008, I was trading well over $1 million and getting a profit share. 2008, I started to trade for my own clients, or 2006. And then in 2008, I started teaching and sharing tips and advice on Twitter. So then in 2020, I started in crypto. To my shame, one of our guys years ago, some of you remember Omar. Omar tried to get me mining Bitcoin in 2015, and I just didn't get it. And but finally, I started to understand it in 2019. 2020, caught it. A lot of you came along with me, and we were buying Bitcoin at 8 grand at the start of 2020. And obviously by 2021, within a year, it was at 50 odd and then eventually 67. Then I started buying gold and silver in 2002 again, big time, and also silver miners as well, which I've shown you. I have previously built 3 businesses offline. I started my first company when I was 21 with no money, but a lot of passion. And that's the other part of wanting to be successful at anything. You have to be passionate about it. You have to be willing to walk through walls to get the goals that you want. And I showed you the other week, one of my new students had sent me his business and life plan, and it just read like a corporate document. There was a mission statement, there was all sorts of phraseology, and I just said to him, I want passion. You must really want to do this, and this is very addictive. And I know a lot of you have probably been trying this for years and years and years. I talked to somebody recently who's been trying for 20 odd years. I think the longest period I ever know a student came to me after 25 years. So it's addictive, but it's so frustrating because we all know we can do it if we just had that extra little push. I also am very experienced in property, but I am, to be perfectly honest, selling all of it at the moment because the UK property market is now screwed. The previous government were making it less and less attractive, and the current government now, it's the golden age, I think, of being able to buy property really cheap and with low deposits was early 2000s. And for those of us who did it then, it was a very good time. Having said that, it's not to say you can't buy property. I was talking to somebody the other day from London. Yes, if you live in the middle of London, no, you won't be able to afford a property unless you're earning a few $100,000 a year. However, you can get on a train and go an hour north or east, west, and you can buy properties substantially less. This was one of my clients who joined us for the crypto wild ride. Steve's been with me since 2010, I think it was. Ashley has to go, so he's only bobbed in today. I introduced you to Ashley before. He joined us in 2020 during COVID. I taught him privately, and within a year or so, he quit his job, a decent job. He had enough, and he now trades for a living, and he works with us here at FMP. Now, the whole point of all of this, does this work? Well, I've showed you this in a previous session as well. This is another young guy that came to us, and he came to us in the July of 22. Phil from Michigan in America, and obviously things were not going well. And this was a live account, and he had quit his job, and his then girlfriend, now wife, had agreed to support him for 6 months whilst he tried to crack it. And as you can see, by the July of 22, he was 12.95% in drawdown. His original 10,000 balance was down at 8,700. And if he didn't do something quickly about this, he was going to have to go get a job. So July 22, he came to us, and the things that I am going to go through with you again today managed to transform his trading. So he went from being 17% down to 17% up in the year, which anybody knows if you get into a substantial drawdown, I think it was 13% drawdown, you get into a drawdown, it's twice as hard to get back to zero as it is to move forwards. And Phil, for the first months, we're taking things steady. This was a demo account at this stage. When somebody comes to me with the kind of balance sheet that Phil did, the first thing to do is get off the live account. Let's fathom out what's going wrong and let's practice on a demo, but following strict rules. And I think I showed you the last time, the most impressive thing from this, his drawdown before was 12 point something. This time is 0.86, which is insane. But it also means for somebody like Phil trading like this, it's quite easy to pass all these funded challenges. So the moral of it all is this stuff works, but you're going to have to put some effort in and some passion. Okay, let me get rid of this, and then we will have a look at my charts and all the rest of it. So I want to get rid of that and that. And here we go. So Rich was going to join us today. Say, unfortunately, he can't make it, but he will be with us next time. And the recording, somebody was asking about the recordings. If you go into YouTube and you search for Tickmill, you will find the previous 2 recordings. If you go in here, and I just saw one of, oops, shush. Cool. I met in London the other year. They flew me to London very kindly, did Tickmill. Here we go. So the third one's up as well, guys. So thank you for Tickmill for that. So the first session, the second section, and now the third was up there. Today is the 4th, and the final one is in February. So they have caught up. So if you want to go back through all of that, you can. Now, when I went to Rich in 2004, I had lost $20,000. I had wasted another 7 or 8 on fake gurus, sexy indicators, amazing things that would make me profitable, working 5 minutes a day and sipping champagne on my yacht. And finally, I dug into my pocket and found somebody decent. Rich started trading in 1983, and he was described by his trainer at Merrill Lynch as being the worst trainee they had ever seen. Having said that, he then went on. This is Rich now with his motorbike. This was in the early days. And these were the days. This actually is a still from a movie. I think it was the movie with Eddie Murphy. I may be wrong. And Rich was in the middle of the floor. And these are the days when the guys were stood in the middle of the floor screaming at each other. And Rich managed to go from losing himself, from the worst trainee ever, to being very successful. He then had his own trading firm where he had people working for him. And then he started to realize that the psychological problems that had affected him were affecting everybody that was surrounding him. So he's got a BA, MA in philosophy, a master's degree in clinical psychology, and, this is a mouthful, graduate of the Gestalt Institute in San Francisco. And this is the thing I can never say, NLP, Neuro-Linguistic Programming. Basically, he specializes in teaching people to think differently. So when you sat in front of a screen and you start doing silly things and stupid things that we've all done, Rich is teaching you how to approach things differently. Now, another thing that he impressed upon me, and I shared this with you last time, this is from inside the Forex Mentor Pro website, but I've shared all of this with you last time. I also shared with you a couple of documents. Let me put these in the chat box now. So this is a gentleman who came back to us last year, originally joined as a life member 10 years ago, didn't do what we taught him, and surprise, surprise, he didn't get to where he wanted, still working at 63 when he'd hoped to be retired. He came back this time determined to do it properly, and this is an introduction to his journey, and you can use this as a blueprint to get you started. And then if any of you are still wanting a copy of my literary classic ebook, then there's a link for that there as well, and the password for this is cable. And I asked the question last time, while I have a sip of my tea, what's the relevance of cable to Forex? I was going to say to Action Boy that I think this sounds right everywhere, but if you can't hear me, then it's something at your end. It's the pound, says Paul. AA, Action. It's an issue at your end. Sound. Here we go. So, cable, and these are coming back into significance at the moment because it would appear the Russians are cutting cables between Sweden and Latvia and Estonia at the moment. But originally, I think there still are cables under the ocean to America. But originally, the markets in London and New York were connected by a huge cable running under the sea. So I said to you about working with Rich. One of the things that helped me was actually when I started to work for a fund, having got my head sorted, it was actually the best thing for me, because if you go to work for a real fund, then you have very strict rules. And if you break the rules and you break them more than once or twice, you are out. And so everybody working in a real prop firm knows that you will be out on your ear. And so the prop firm was really good for me. And in fact, when I stopped working for the prop firm and started to trade for my own clients, some of my bad habits started to creep back in because, hey, I was the boss. So I find nowadays there's loads of these around. FX2 is one we use. Ashley has tried out FTMO, 5%ers. When these first came out, not these specific companies, but I didn't like the business model for it. It was all designed for people to fail. They made it as hard as possible for people to pass a challenge. And the few that got through, even if you managed to get through and get up to 100,000 account, one bad month and you were out. So when firms like this came in, things started to change in a positive way. Instead of having to make 10% in a month, which is too much and means people are risking too much, now they have it where you only have to make 8%, and I think you have 6 months to do it in. You have decent leverage, and a lot of you haven't got decent leverage anymore, depending on where you are in the world. And from an educational point of view, these are really useful. So I would suggest to anybody who is currently having difficulty, get one. Get the cheapest one you can find. Get Googling or YouTube. I'm always wary with YouTube. But get Googling for some reviews and find a decent one. But something like this will give you the discipline that you need to be able to do this properly. For a lot of people, the issue is when they're on a demo account and it's not real money, the heart doesn't start going, the stress doesn't start, and people cheat and move the stops and all the rest of it. So that's really decent one. There's also one in America now that Ashley found the other day, which Wanda are doing. So if you can't get one of these programs through Europe and you struggle anywhere else, then there is one in Wanda. And then this is where I start every day. I have a look and read Marc to Market. It's not me. This is Marc Chandler, Chief Market Strategy at Bannockburn Global Forex. I will put the link in the chat box as well. It's really good at giving you a summary, a 5-minute read of what is happening around the world specifically for Forex. And it will also help you to understand more the significance of CPI and PPI and all these different forms of news, why the dollar has suddenly done something because of what happened in Japan. Well, at the moment, you might not know, but if you skim through this every day, you don't generally have to spend too much time on China. But if you have a go through there, you will be more knowledgeable than most of the rest of the traders around the world. I showed you this last time. This is from Australia, so this is OEC World. And I was explaining, if you are trading the US dollar against the Aussie dollar, you are trading the US economy against the Australian economy. And therefore, it is more than useful to understand what they do and where the stuff they sell goes. And I was explaining that the coal briquettes and iron ore are their biggest exports, and their biggest customer is China. And then I explained if China invade Taiwan, that is going to be a massive problem for the Australian economy, and the Australian dollar will collapse. And equally, China last year told its steel producers to buy less iron ore. So one of the major exports from Australia, because the construction industry in China is in drawdown, is flat and in a recession, and other countries in the world, many of them also are in a recession, then they told the steel producers to buy less iron ore, produce less steel. Clearly bad for Australia. And again, I think I shared this in the third one. And the significance of this then, that Australia's expected tax money, the money they thought they were going to make in taxes on all these exports, they've had to revise them lower because less stuff is going to China. So joining the dots from all of this will help you once again to determine what the heck's going on. So at the start of the week or on a weekend, I have a look and remind myself what happened for the week before. Every piece of red flag news is related to inflation, interest rates, or growth. And so the significance of all of these is very important. And for example, if fewer people are claiming unemployment benefit from the government, then that's clearly better for the government and there's less money being wasted. And then the core price inflation. Now, at the moment, these figures are still back to front because the governments were trying to get inflation up to 2%. And here on Forex Factory, they're still showing it as a negative. But again, inflation. And then you have retail sales. So Canada, last week, the retail sales were really bad. And also the previous months were revised down as well. As if there's less stuff being sold through the shops, then that is bad for GDP. That is bad for the tax revenue, and that is bad for the overall economy. Not good. Retail sales flat. Core retail sales flat. Unemployment claims, again, I just explained. So I go through all of this. I have a look and remind myself what's happened for the week before, and then have a plan and have a look for the week ahead. And once again, I explained to you last time. Let's have a quick look here. Remember, we are looking all the time of multiple reasons, technically, to take a trade. But what we also have to look at is, well, what could go wrong? And what could go wrong and spoil things is red flag news. Now, there is another issue we all have nowadays, and Mr. Trump is back in power, and he just randomly, at 3 o'clock on a morning, can be on Truth Social, randomly tweeting, and that is going to cause some mayhem and some fun and games. And yet, when you look at different currency pairs, for example, the dollar Swissy today came down and touched a 55 EMA, a trend line, and 78.6 fib to the pip, as we anticipated last time I think we were with you. Certainly for members of Mentor Pro, we said that would be the area to be considering a long on the dollar Swissy. So, issues this week are, if you're trading the Aussie dollar, then you need to be out of it before, by the time London closes tomorrow, really, because this for me in Portugal, which is UK time, is midnight in the morning. I am in bed, and therefore I don't want to get caught out in any chaos if there's a surprise with the news. And then Wednesday, the big event of Wednesday for Canada, there's a lot of it going on. You've got the interest rate statement. Canadian economy is not in a good place. Trudeau appears to be on his way out, which many folks I speak to from Canada can't wait to see the back of him. And so this is really important for the CAD. So if you're going to trade the Canadian dollar, I personally will not be in it after Tuesday evening. So for me, you tiptoe around the news and you go off and find something else. The biggie of the week is FOMC. And what everybody's going to be looking for now, Trump yesterday said, I want the interest rates down. Powell, who has refused to quit, and his tenure is there till 2026, has said previously he will be data dependent. He's got the job for life at the moment, in that Trump cannot get rid of him before 2026. I can't see he is going to cut rates on Wednesday. If he does, that would be a big surprise, and that could rock the markets. So then what everybody's listening for, the analysts, are what Powell says in the press conference, because they're going to say, hey, President Trump has said, you need to drop the interest rate. What are you going to do? And so then we're going to have, who's got the bigger balls? And Powell is going to be saying, well, we're data dependent and we are independent. So any sign that he's kowtowing to Trump, that could rock it as well. And then on Thursday, it's the turn of the Eurozone. So if you're trading the Euro, Monday, Tuesday, up till mid-afternoon Wednesday, is good for trading anything Euro-related, but not the CAD, Euro-CAD. Thursday morning, don't be in the Euro, because it could potentially go nuts. Now, it's anticipated at the minute they're going to cut the main rate to 2.9 from 3.15. Again, if there's a surprise, or if there's a surprise in the statement, sometimes these guys will say something or do something, and then they'll contradict themselves in the statement. So I always wait for the statement to come out. And you certainly wouldn't be trading the euro dollar at this time, because there's all of this lot coming out at the similar time. So this could be good and send it up. This could be bad and send it down. And you're just asking for trouble. And again, wait for the ECB press conference to be out of the way to see what Lagarde has to say. And then Friday, I don't trade Fridays very often. Historically, for me, it was a bad day. But again, you need to be paying attention to the red flag news. Any questions so far about news and fundamentals? And I just shared with you the notebook from David. And Ida says, all clear. And David is with us this evening as well. David, who from the UK, lives in Scotland. So, on a weekly basis, on a Sunday, do my analysis and I share it with members. I explain in advance what I'm thinking of trading this week. And the starting point is technical analysis, 70% technical. And then I use fundamental and news to filter the decision, just like I've explained. So if I've decided I'm going to buy the USD against the Swiss franc, I'm not going to be in it after London closes on Wednesday, because FOMC is going to be out. So by that point, I either need the stop to entry, and or some profit taken off it, or close it. Even if I'm in a loss, close it. Because if you leave it to run through the news, big news, you are gambling, not trading. And then the section I was talking about earlier with Rich Friesen, this was the thing he impressed upon me. And in our first session here, we said to folks, okay, the first 3 people that send in a business plan, we will review it. And I think we had 1 of you out of 80 bothered to do it. And again, the document I sent you out, the cheat sheet that I've just sent you from David, he did that back 2015 and had to come back to us last year and start all over again. So this is the most important part of it. Have a business plan, treat it like a business, understand what's going on, get your risk management right. But as I said earlier, these funded accounts are an inexpensive way of giving you discipline. So consider that. Now, I also explained I've been using the same strategy for 20 odd years, which is very unusual. And years ago, there used to be a guy, I'm not going to say his name, Russ, forget his surname anyway, every year would come out with all the big marketers, the latest, greatest wonder system for this year. And it's like, well, I'd bought the wonder system in 2003, and then 2004, what, there's another? And 2005, yes, there's another. Now, what I have done over the years is I've taken more and more things off, but the good news is I use it for crypto and I use it for stocks. And as I said earlier, I have been busy in that neck of the woods today. And within Forex Mentor Pro, I do go through some of my crypto portfolio, and I also have a separate website for that as well. Now, another thing to note, I mentioned, I believe last time, correlation, and let me put this in the chat box. Correlation is really, really important because, there you go. You will see here, this is correlation on a daily time frame of the Euro USD against the New Zealand dollar. 89% of the time, the Euro USD is going in the same direction as the NZD. 87% for the pound, 84% AUD. USD CAD going in the opposite direction, 76% of the time. Dollar yen, 83% of the time. And the dollar Swissy, when the dollar Swissy goes down, the euro dollar goes up. It doesn't happen instantly, but that is the correlation. So this is why you don't take more than one correlated trade at a time, or if you do, you need to reduce the risk. Because if you take 3 trades at the moment, and especially with Trump in the middle of all this, and $1 trades, they will all lose. So it's really important you pay attention. Years ago, I used to just trade the majors. And nowadays, I don't. I look at 20 odd pairs and then I narrow it down to 4 or 5. And this week, I found it really difficult to find any of the majors because the price, other than the dollar Swissy trade today, the price was too far away. So on a daily basis, I go and I have this set. Well, I'm also looking at uranium at the moment. Made a lot of money on uranium in 2023, 24. Got out of it in November, the rest of it in November. And been considering getting back in. Thankfully, I have avoided it, and I have explained to folks we're below trend lines and EMAs, and we're in down channels on lots of things. The demand for uranium is going up, and yet the supply is restricted, particularly because of Russia. Although when there is a peace settlement between Ukraine and Russia, that could change things rapidly. I do want to get into this, but hey, I am waiting and waiting and waiting. And until or unless it comes into my trap, I am leaving well alone. Now, the one that I do every day, where's it gone? Here we go. So what I'm trying to gauge on a daily basis is where is the big money flowing? And where are the big funds looking to place their money? And so here, this is the dollar index. And from October, it's been very easy to trade because you are simply buying the dollar. And we had pullbacks. Then we had a break last week. So we have a break of a trend line. But I still said to my folks, look, for me, until or unless we break the 78.6 fib, I am still of a mind that we are in an uptrend. I also have a fundamental bias at the moment that I don't think that the British economy or the European economy is in a good place. And therefore, I still have a sneaking feeling that the dollar is going to continue to be strong. But what I said to folks last week is when it was up here, when it broke, I anticipate it will probably bounce at 107. And it's this multiple reasons thing again. it tends to stop at whole numbers, 107. The 55 EMA was here the other day. So you've two reasons. You've got major previous support and resistance going back ages. It was messy in 2022, but it was going on. And in 2023, it rejected there a number of times over a period of a few months. And then here, it stopped days and days to the pip and rejected. So a big area. Trend line, uptrend, buyers fundamentally. So my thinking was we're still in an uptrend until this breaks. Even if this breaks, I am not going to rush to short the dollar. I'm going to contradict myself and I'm going to say, right, I am going to look down then around 105 and 106. 106 whole number, and especially 105, I would expect a bounce. Not financial advice, and I might get it wrong, but look what happened here with the Swissy today. It came down, as I just shown you on MetaTrader. It touched the trend line on my MetaTrader, 55 EMA. I had a fib of the recent move from in here. There you go. To the recent high up here. So, oops, upside down. So I have a fib level. I have a whole number. I have previous support and resistance. I had the trend line in here, trend line there, 55 EMA, uptrend, got the dollar index bouncing in the same place logically as well as, and therefore that for me was an A-grade trade. Now, I also look at the stock market. I'm trying to work out where the money's flowing. Is money going into the dollar? Is it going to stocks? Is it going into gold? Is it going into crypto? And one of the questions that you have to be thinking all the time, and I mentioned this previously, is risk on or risk off. And are you familiar? Anybody tell me what is the difference between risk on and risk off? Action Boy says his sound's sorted now. That's good. And Elijah, right here. Right. Risk on is, as it sounds on the tin, when people are willing to take risk, they were more willing to put money, invest in riskier assets, like stocks, like smaller stocks, like crypto. When people are worried and we go into a risk-off environment, then people pull their money back into government bonds and they pull their money back into gold traditionally. And we used to have a scenario where we could be in a risk-on environment for 6 months or a year. Nowadays, it can change in an hour. And with Trump coming back, it certainly can change in an hour because with a tweet. So the point is, though, the NASDAQ is also in a clear uptrend. Look what the NASDAQ did last time it pulled back. So if you're trading futures or you want to trade the NASDAQ, it pulled back to an area of major previous support and resistance, a trend line that went back to August, 78.6 fib of a recent move. Multiple reasons to suspect if it was going to bounce anyway, it was probably going to bounce there. S&P did the same thing. So the S&P last time, I think it fibbed from there to there, came into here. So again, we're looking all the time, say, well, if this thing drops, where's it probably going to stop? I have the US 30 I look at as well. I look at the 100. Started paying attention to the Russell because the S&P, 7 of the stocks in the S&P, Nvidia, etc., make up something like 35% of the growth last year. So I'm more interested this year investing in smaller stocks in the S&P rather than the big ones. And even the likes, I think Goldman Sachs are saying they think they might make 8% next year, but in the following 3 years of this decade, 3 or 4%. So if they're thinking it's going to be that bad, then this is why I like to look at different things all the time. And the other thing is, what's the government? How much is the American government having to pay out in interest, which is bad for the American economy, of course. Now, what's been really weird of late is gold has been going up at the same time as the dollar's been going up, and the same time as Bitcoin's going up. So it's all a bit weird at the moment. But with gold, we started buying gold at 1,800 a few years back. We were buying it at 1,800, I think, 18 months ago. The start of last year, it went up 35%. Where did it stop the other day? Almost to the point, exactly where it stopped last time. This is the all-time high on gold. And I explained this last time. If you've bought a trade, you've bought something down here, and you're well in profit when you get up here, you immediately start to think, hang on, this is in danger of dropping back down again. And then you can start looking for clues. I don't use RSI for Forex, but I do use it for metals and I do use it for crypto. RSI started to turn back down again. So that was another clue. We had a lot of MACD divergence on a lot of things of lately as well. Another clue. So I do have a fair amount of my portfolio tied up in gold and also in silver. And I explained about silver the other day. Silver keeps trying to break out of a triangle. This triangle is about 600 points. So if silver does break out of here, then the next stop would be 36, which would be a break of this recent high. All-time high on this is $49 in 2012. So technically, it's got the potential to go a lot further. This is oil, the oversupply of oil around the world. It did go up the other week. Trump is now trying to talk it back down again. Bitcoin. So I pointed out the other week, there is a head and shoulders pattern on Bitcoin at the moment, which would suggest if this thing sets off that this could be a drop anywhere down here. And more recently, I've been saying to my investing group, 92,000 was the place to be buying for me. So we're obviously in a range at the moment. The Trump effect of what's going to happen in crypto is not going to be as quick as the crypto world want. I think they've got 180 days to come back with recommendations. So we all get frustrated in crypto if it's not going up every single day. But for me, if I wasn't in it already, not financial advice, but 92.50 would be an area I would be thinking of buying. I personally have an order, what I class as a stink bid. I think it's at 76. And I would probably be tempted at 82 as well, personally. Ethereum cannot break out of its triangle. There's a triangle pattern in here. It keeps trying and trying and trying. And again, I wait for it to break out and pull back before it sets off. Although I did say to my lot 3.2 was a potential area as a buy at 2,900 the other week. But we really want this to move. Trump's group are buying Ethereum. There's a lot going on. There's yet another upgrade coming in March. So I still think that Ethereum will go on a run. The last time it went to 4,900, so it's got a lot of potential there. And it's the silver through Bitcoin's gold. And then in here, these are some of the other ones. I showed you this one before. This was another break of a trend line. What I do, 55 EMA, break of the EMAs. I said to my lot, I was buying at 6.5 cents, and it went up 500% in 18 days. So these are all about patience and waiting. So like I've just explained to you now, you can be aggressive in here. If not, you wait for this to break out and pull back. And if you look at crypto at the moment, I sent a video out last week to my group. There were so many cryptos that were in this pattern. And the safest way to wait is to wait for the break and the pullback. And I only buy a crypto if it has the potential to make at least 35% to its recent high. So for me, Ethereum at the moment doesn't tick the box, nor does Bitcoin for me personally. But these two are slightly different, and Bitcoin is very different. And what I've done over the last couple of years is take the profit from big moves like this H bar and taken some of the profit, put it into Bitcoin, which is a way to do it. And then Solana was a fairly new one for us. We started buying this last year. In the summer, I was buying at 120, I think it was. And then in December, I said to folks, look, again, this is not rocket science. This is major support and resistance where it's bounced previously. We had the EMAs coming in behind. We've got the trend line in a bull market. That was an area to think. Now, yes, I'm breaking my own rule because it's not got through all of this. But the difference for me with this one, this is one of my top 5 crypto. And potentially now, if you were to get in somewhere down here, if it would treat us to 185 again, it would tick the boxes. XLMM is one that I have held for a long time, and that suddenly woke up in November, broke the trend line, broke the EMAs, broke the major pieces of support and resistance, and that thing went up 360%. XRP, a lot of you will be familiar with this one. It looks like the SEC, well, Gensler's gone now, which is great. New head, and Hester Pierce is in there, and she's very pro-crypto. So all looking positive for XRP. Again, we were buying in the summer at 50 cents, and this was the breakout down there. MicroStrategy pulled back today. So there is a rumor that they may have a problem with tax to do with their Bitcoin holding, even if they don't sell, because this was something I think Biden's lot brought in, where these bigger companies, they were going to tax them on profits, even if they didn't realize the profits, which is really shooting business in the foot. I have been a buyer of this from, $30 odd after the share split. I'm still quite happy to keep buying bits of this. And I think Coinbase probably now is my biggest holding crypto related. And again, I was buying, I said to folks the other week, I was buying at 250. So that's using M2, the two EMAs, trend lines, support and resistance to be in multiple markets. Okay. Any questions on that? And then stocks I am currently looking at, I am looking at Tesla. I missed Tesla. There is results out in 2 days' time, and I wouldn't get involved at the moment. But if Tesla goes on a big enough run down, particularly anywhere 320 to 300, I would be a buyer of Tesla. But it all depends on that news. But then I would have the potential for it to make 60% to go back up. As somebody pointed out to me recently, one of my clients, Tesla is not a car company. It is a data company. And there's all sorts of talk about driverless taxis and other things that Elon Musk is getting up to. So I would be interested down here. It's too expensive for me up here. Baba is a Chinese stock. I did buy some while ago in here, took a bit of profit, got out down here. It's at a trend line again. If it could break and pop, then that could be a decent move. HIMS is a medical stock that we hold. And again, that was the buy on a pullback in there. And then today, I have bought some NVIDIA. I had missed NVIDIA the first time along. You were probably familiar with all the news that AI Chinese have come up with a simpler, cheaper version that apparently is very good. Although I was reading lots of reports today, it's not quite as straightforward as is made out. And the Chinese, even with the cheaper kind of chips, are not getting enough of them. And therefore, up here, I didn't want to buy because it was too expensive. But in here, I have the potential with a stock has to be able to get me 25% within a month or two. Crypto has to be able to make me 35% within a month or two. I then have order, and the way I get involved in things like this, I have bought a third of what I intend to buy here. I will add to my position if we get anywhere down near 100, and if we get down near 80, I would be likely to pile in. Another one today was this one. And so some of these, you don't want to be buying all of these at the same time. This is another AI related stock. I bought some of this from my daughter, and that was at 52. And then we've got orders in for 45 and 35.70. And then the other one that we bought today is this one. So this is Vistracore. So as you can see, this is when everybody's panicking. It's scary. Oh, the world's going to end. AI is finished. This is when I buy. And yes, it's risky, but the potential gains, I am not interested in buying the S&P and hoping I might make 5% on an average year. I want to catch a big one. And it's the same when I'm trading Forex. I'm not sat here scalping for 8 hours a day. I spend as little time as possible in front of charts. I do the planning, and in general, I place forward orders. So let's have a look now at Forex. So I showed you this last time. I have a screenshot for this somewhere. So if anybody wants a screenshot, put it in the chat box and I will drop that in there as well. But these are multiple reasons. So I need 5 reasons to take a trade. And then from there, I build a picture on what I think's going on. And then, as I said, I filter it with my fundamental bias. But that for me today, pre-planned, was a potential long on the dollar Swissy. Now, I look at the dollar index, as I've just shown you. I showed you how I was kind of thinking it would bounce at 107 area, which it has done. And again, we've had a look at stocks. We had a look at gold. We had a look at silver. Swissy we've just looked at. So what I do to start with, I look on a weekly. I only use the 200 and the 55 EMA. These horizontal lines are showing you here where the monthly 55 is at the moment. And this one is showing you where the monthly 200 is now. Because I want price to get away from these areas. And then I start thinking, well, where's this thing probably going to bounce? And so if the dollar Swissy goes lower, I would anticipate it would start or to struggle around 88.67. Now on a weekly to fib this, it's miles away. So when I go down to the daily, I then do a daily fib. There was a clue here. This is MACD divergence. We were getting higher highs here and lower highs here. This is a clue that this was about to top out and at the very least pull back. And I showed you this in previous sessions. There were lots of MACD clues as to potential pullbacks. So that's another part of building a picture. And then the Euro USD, and you can have a look. This is Euro USD. So last week it's broken on a weekly. So now you think, well, I'm going to buy then, yes? Well, again, if I fib this on a weekly, then it still hasn't broken the 78.6 fib. I think I'd fibbed it from here. So remember, until or unless it breaks the 78.6 fib, I still think this is going down. And I still think this is fundamentally going down. The Eurozone's in a mess. You've got all this positive energy coming out of America with Trump, and you've just got a crowd of depressives and red tape merchants and socialist idiots blowing money on various projects that are counterproductive at a time when most of these countries are bankrupt. My biases still want to sell this. I can't take this at the moment because I only had one or two reasons on this. So I had some previous support and resistance going on, and I had the 55 EMA in the area. But other than that, I don't have enough reasons to take that trade. But the Swissy, I did have multiple reasons. But then the other thing to notice, I said a little earlier when I showed you about correlation, the euro pattern is the same as the pound pattern at the moment, is the same as the Aussie pattern at the moment, and is the same as the NZD pattern. So they've all broken out of an area. They're all struggling to find multiple reasons. And therefore, for me this week, trying to trade on the majors was a no-go other than that Swissy. And the CAD is an example. The CAD is up here in the middle of nowhere. It had previously spiked through and stopped here, but I have no idea if this is going up or down. And therefore, for me to take a trade on this at the moment is gambling. I don't have an edge. I don't have multiple reasons. It could go up, it could go down. And if it goes up and I have to have a stop up here, I'm risking 180. Well, I'm not going to risk 180. My maximum risk is 75. It's 100 here. So this is kind of like on elastic. It keeps pulling away, going back. Miles away from anything. I'm not interested. I will start to look if we get a decent pullback. But for now, leaving it low. So this is the point as well. When I look at 20 odd pairs, once I've narrowed it down to 5 or 6 at most, I create a separate profile inside MetaTrader, and I just have for this week my pairs to focus on. Because if you're looking at 20 pairs every day and stocks and crypto like I am, you end up missing everything. Euro pound, the euro pound broke a trend line the other week. All the trend lines have disappeared. So it was a significant break back up. What's it done? And this is why I use these EMAs and not the others. I used to use the 5, the 8, the 21, the 34, 365. I got rid of all of them. I find these to be the most reliable. When price breaks and sets off from an area, instinctively I believe that they will struggle at an EMA. And this is the euro pound at the minute. So again, I can't long this at the moment because the probability of this thing getting stuck in here is greater than not. And I can't short it because, again, we're stuck in a range and I'm going to be looking 80 pips for a stop on the euro pound. Only does 44 in a day. And even if I say, okay, well, I'll stick the stop in here, it's probably going to struggle at the 55. And therefore, there are better opportunities elsewhere. MoveOn.com, leave it alone. And then dollar yen. Now, the dollar yen, at the moment, yes, it's gone through the 55, didn't have multiple reasons. But last week, we had a decent trade on the CAD yen because we were able to use the EMAs to our advantage. And we had a 60 pip stop with a potential, well, as it went 170. I think Ashley was in this last week. And again, we're in a downtrend. We have broken below all the EMAs. We've broken through. We've had a pullback. That was a trade. That was a trade. That was a trade. Euro Aussie. I had an order today on the Euro CAD, I think, which didn't fire. This was Euro Aussie on Friday. 61.8 fib. Stop behind the trend line, the 55 EMA, the 61.8. The whole number, whole numbers as daft as it is, have been really important. So 165, 166. Some traders pay attention to the middle number as well. 165, 165.50, 166. But here, you've got 61.8 fib, a trend line, a 55 EMA. You could place your stop here. You could be aggressive at 33, or you could be more conservative at 60. So that's 4 or 5 reasons: previous major support and resistance, and the final part of the puzzle, even if I risk 55, it has the potential to make 3, 4, or 5 times the risk. And the European economy is bigger than the Australian economy. We've seen that the iron ore sales in Australia are down and the tax revenue is down. So with these two, it's not which economy is best, it's which is least worse. But technically, that is a breakout pullback. That was the pullback. And then it's consolidated and bounced repeatedly off here. Now we have multiple reasons. Euro yen was a no trade, I think, for this. Was it? I can't remember. Actually, would tell us. Euro New Zealand. Euro New Zealand looks interesting, but it's not as strong as the Euro Aussie because the Euro Aussie has more reasons. But remember, there is Aussie news out. So we're going to have to be careful with this, with the Aussie news. If this starts off up here when the news comes out, which is 180 pips away, and the average range is 100, I would prefer this to be up here when the Aussie news comes out. Then I might leave the order in at half risk. So instead of risking 0.5% of trade, I might risk 0.3. The reason being, if it starts up here, that would be more than 2 days range. And I do pay attention also as well to the daily range. And particularly if you are trading shorter time frames intraday, you always need to know where these big areas are and these big EMAs, because you may have decided to short this here on Friday for a good reason. But if you're only trading on a 5-minute chart with nothing else on it and it's bounced, you think afterwards, well, why the heck did it bounce there? Well, it bounced because all the reasons that we are looking for. So by doing this approach, you can reduce the amount of losing trades. You give yourself the opportunity to find trades that can give you 3, 4, 5, 6 times the risk. And therefore, instead of being a busy fool and placing 10 trades a day, and the only one who's making any money out of this is the broker, you make money because you're just trying to catch a big one. And a friend of mine explained to me years ago, and he said, look, Mark, my philosophy is when I go fishing, I don't go fishing for trout, I go fishing for tuna. I want to catch a big one, and I am willing to wait. And there is a famous quote that we all use, the experienced traders: we are paid to wait. Now this lot, there's far too much going on here, but this is one of my colleagues. He trades on 4-hour charts, but he still trades initially from this simplistic pattern that I have shown you. And this is why I start every week. Is it going up? Is it going down? Is it going sideways? And if it drops, where's it probably going to stop? And if it pulls back up, where is it probably going to stop? And at the end of the day, what we are trading all the time is probability. I can show you a trade setup like that dollar Swissy. I think there's 6 or 7 reasons why that was a really good trade, but it still could have failed. But I would have taken it every single time because the probability was in my favor. And again, you have to get used to the fact that losing is part of the game. And once again, I was explaining to a guy the other day, if you've opened a business, you've opened a coffee shop, and you've had to have the place refitted and rewired, and it's cost you $50,000, and then you've paid $20,000 for the furniture and $20,000 equipment, you spent $100,000. Well, as a Forex trader, you can start today with a very limited amount of cash. But what you are doing, you are risking an amount, comparatively small amount, is the cost of doing business. And that's another important part of this puzzle to get your head around. Right, I need a sip of my tea. It's gone cold now, but let's have a look. Any questions? If anybody has any questions, stick them in the chat box. Sheikh Abdul says, not the Sheikh Abdul, I believe. Well, if you are the Sheikh Abdul, I have a deal for you. There is a free course on our website, Sheikh. There's also there's a free course here. Let me show you this. Go to the blog, and there's a free course in here. You can join as a member, and there are 3 levels. You can join at $69 for a month. Per month, you can join off at $297 for a year, and $497 is, there's quite a few people in here tonight. You pay it as a one-off payment. If you pay $4.97, you get an hour with me, and I will review your current performance, and I will give you a personalized plan of action to follow. If you do it on the $2.97, you either get an hour with Ashley or half an hour with me. There is a 30-day money-back guarantee. So if anybody tries it and they don't like it for whatever reason, we'll give you your money back. So it is a no risk, completely no risk. Well, I'm just looking back through the questions now. Olive says, sorry, I find it difficult reading and understanding trading with the news. I think the main thing, Olive, is just to keep it as simple as possible. Don't get too carried away with it. I, years ago, went down the rabbit hole of global macro, and it's far too deep and far too confusing, and then you never make a trade. But say, if you read this, it will give you a good idea of what is happening around the financial world. And also, if you go on to Forex Factory, if you go to Forex Factory and you don't know what this news is about, if you click on this yellow box here, it will explain to you what it is. And remember, it's everything is to do with interest rates, inflation, or growth. In other words, the health of the economy. And there was something else I wanted to show you in here, actually. This is somewhere else. So I explain to folks what you should do when you're looking at a currency. And remember, I showed you about Australia. Australia produces coal and iron and ore, most of which it sells to China. So as I showed you, if China's producing less steel, they demand less coal and less iron ore, not good for Australia. So what I explain to people is this is the euro. Imagine you were buying stocks, and imagine you said you're going to buy airline stocks, and you can't decide whether to buy Emirates or Qantas, probably the same thing these days, but you can't decide. So you've decided airlines is the sector that you want to be in, but you can't decide which company is the best company. And so if you look at this is the Eurozone. So the growth in the Eurozone is 0.9%, which is poor. At the moment, they're paying 3.15% interest, and it's going to go down to 2.9 tomorrow, we think. So think of that as a dividend. If you were to put money into this company, it's not growing with any great spectacular growth. It's paying 2.9% as a dividend. So, okay. And then inflation's supposed to be 2% all of it. I mean, these figures are a work of fiction. We all know when you go to the shops. I bought a loaf of bread yesterday. I don't go shopping often, my wife goes. A half loaf of bread here in Portugal was $2.79. And I ate it today. It was supposedly some healthy thing. It tasted like blooming cardboard. So the price of everything is way up on what they're telling you with inflation. But the government's massaged the figures because, hey, they pay rises for public sector workers, the police, the hospitals, etc., is all based on the official government figure. But that's the euro. So, okay, there is some growth. They're paying 2.9% dividend. If you look by comparison, America, well, their growth is triple what's going on in the Eurozone. And they are paying 4.5% dividend, which is their interest at the moment. And their inflation is equally not great, not under control, down to 2. I think all this lot in the end, they'll just change the rules and say 3 is what we're aiming for now. But so just to compare, this company is growing. It's got a positive management team. There's a lot of positivity energy-wise about what's going on in the business sector in America. They're paying a decent dividend, and the inflation is fairly under control. The Eurozone, by comparison, ain't. So fundamentally, you just think about it in those terms. You don't need to go any deeper. And it scares most people when they start talking about, all fundamental analysis. Most of it's just common sense. And as I said earlier, if we're in a risk-on environment, people are willing to take risk and put money into crypto, etc., and to stocks. And if people are scared, they put money into bonds and to gold, usually. Paul says, sorry I joined late today. Naughty corner for you, Paul. If you go on to Tickmill's page in YouTube and you go on to videos, you will find the 3 previous recordings. So this was part 1. It's a series of 5. And as I explained at the beginning of this session, it's the steps I go through with private clients, and it's the steps that our members who are doing this themselves, they all are shown how to follow this step-by-step process. And I showed at the beginning the results. For example, this Oh, it's gone now, the image. I showed you one of my students had gone from being 13% down in a year to 17% up. I've been doing this for 20 years and I've been using virtually the same strategy. Yes, a bit of a tweak here, mainly taking things off. But anyway, the 3 previous recordings are here. The recording from this session will be available probably within 10 days with Tickmill. And then the final session now is going to be psychology. Rich Friesen couldn't make it today, unfortunately. Any other questions? DeWall says, thank you for the session, Mark. You're welcome. Just having a look back through all of the chat box and questions. Okay, I think that's it. I hope you got something out of the session. I hope it will help you. If you want to know also what we do, if you go into our YouTube channel, there are lots of videos showing you, where have we gone? Can't find my own now. No, there we go. So if you go into here, there's loads and loads of examples of trades that we take. We share them in advance. So we've got winning trades here, like last week, I think it was 550 pips in profit from 2 trades. And again, we're just trying to catch a big one. And then Ashley posts a lot of his trades in here. But we teach folks how to do this. We explain to them in blog posts and videos on a Sunday what we're going to do for the week ahead. Then we update them during the week. And then we also have a live training tomorrow at 11 a.m. tomorrow morning. If you bear with me a second, I will get you the link. So if anybody would like to come along as a guest tomorrow, you need to just register. This is a different Zoom link, but just let me get this for you. Okay, so if you click on that before I close this session, you will be able to come along to our live training tomorrow. Where's it gone? Oh no, I need to go to everybody. There you go. So when is the psychology aspect? We had to reschedule it, and I can't remember when the next session is, to be honest. I have so many windows open now. I don't think I would know where to find it. But if you look on the registration, you should have had an email today reminding you about this session. It will tell you the next one. It's obviously in February now. I think it might be the 6th of February, but I wouldn't swear to it. If you email us or if you want to come to this session tomorrow and ask out, I'll find out for definite tomorrow. Ida says, nice, thank you. Elijah, thank you, Elijah. Elijah, one of our members, says the 17th of February. Thanks for that, Elijah. Somebody paid attention. Namandi says, okay, right. I thank you all for attending. I hope you got something out of it. And apologies for the not being psychology today. Psychology is a big part of the puzzle with this game. But as I explained, I find discipline is easiest when you have somebody looking over your shoulder, or if you do one of these funded accounts where it's simple. To me, this is capitalism at its purest. You have the potential to make money, but if you break the rules, you're out. And you don't need any staff, and you don't need any building. You can do this all from your back room or your bedroom. Right. I hope you've all enjoyed it. Thank you so much for attending today. And I will be back with Rich Friesen. Rich is very entertaining, fun guy. I explained he went from being the worst trainee ever for trading for Merrill Lynch in the Chicago Board of Exchange way back in 1983. And I showed you at the beginning, this was Rich. This was an Eddie Murphy movie, I think. But that was him in the middle of the floor of the Chicago Board of Exchange. And this was him when he still had a bit of hair in front of a lot of screens. Imagine having that lot of screens, guys. But that's Rich Friesen. Will be with us next time. And he's a lot of fun, is Rich as well. Right. Thank you, one and all. I will see you next time. Goodbye.